start recording now. And tonight's subject is the case for gold. We talked last week about the fact that that inflation is a cancer that's eating up the economy of the United States, but it's not just eating up the national economy, it's eating up our personal economies. If you have dollars, and most of us do, your dollars are becoming worth less and less every day, and they will continue to become worth less and less until they become worthless. So what's the answer? Well, I believe the answer is holding a certain amount of your assets in gold, because that will keep your money from, or keep your assets from becoming totally worthless. So I decided to cast this in the manner of a court case, the case of gold versus the U.S. dollar, or actually gold versus the U.S. government, in a way. So the plaintiff is gold, and many of you think of me as a person who's only into rare gold coins, but I also see the value of gold bullion. As a matter of fact, this is a picture that I personally took a couple of weeks ago. I got a rather interesting package delivered to my office. It was $500,000 worth of gold bullion. And before I packaged it up and sent it on its way to various different places, part of it was for the fund that I mentioned that George Bakalov and Chris and I are principals of, and part of it was for clients of Golden Art LLC, which is our gold company. But this is a picture of part. I couldn't get all in the picture, but this is stacks of U.S. $20 gold coins, pre-1933 gold coins, which is the most popular gold bullion coin in the world. And I got a nice dark background, and we stacked them up, and I took 30 or 40 pictures, and this was the best one. So anyway, just a little background there. That's real gold there, what you're looking at. Lots and lots and lots of gold. So the plaintiff is gold, and the plaintiff, as in most court cases, has a few things to say. The defendant is the dollar, and the dollar is basically paper. It's paper with some green and black ink on it, and it's going to have a few things to say. So let's start with the plaintiff, what its assertions are. The plaintiff asserts that the U.S. dollar has lost 96% of its value since 1933. We'll find out in a minute why 1933 is a very important date. Further severe inflation, even hyperinflation, is likely. We've already had a lot of inflation. Unlike any other precious metal, the dollar and gold have a very special direct inverse relationship. There are other precious metals out there, but the dollar and gold have a special relationship. The plaintiff further asserts that gold is the only real money, the only money that has historically been uniformly accepted. Silver, to a lesser extent, has also been accepted as money. Other precious metals like platinum and palladium are valuable. They do tend to move somewhat in sympathy with gold and silver, but they have not ever been used as money. Gold is the only precious metal that has always been recognized as money, and silver in many societies has been as well. Gold bullion is much safer than paper money for reasons that will become obvious, and investment-grade gold is a much better investment than bullion gold. All right, now here's the assertions of the defendant, which I hasten to say are all lies. The defendant says that inflation is normal and acceptable, that while it's bad for individuals to be in debt, there's no problem with the national government carrying massive debt. The best way for a nation to deal with an economic crisis is to spend its way out of the crisis. A little side note here, we homeschool our daughter, and most of the families in our church do the same. So one Sunday a few months ago, we were having a discussion after church about the crisis in the country and how the government's dealing with it. And I got the teenagers aside and I said, let me ask you a question. What if your parents were to have a little family meeting with you and say, kids, we've got a real serious problem in the family, and I think you're old enough to understand this, so here's the situation. We are about to lose our house. Our credit cards are maxed out. As a matter of fact, we've been using one credit card to pay off the other credit card, and we're just about to lose everything. But we think we have a solution. Uncle Phil has agreed to loan us a large amount of money, and here's the plan. What we're going to do is we're going to take that money that Uncle Phil has loaned us, and we're just going to spend like crazy until we spend our way out of debt. And the kids looked at me like, what? And I said, what would you say to your parents? And they said, well, we'd think they were crazy. And I said, yes. And I said, what would you say if your national leaders, your president, your Congress, said the same thing to you? And they said, oh, well, we would think they were crazy. And I said, well, that's exactly what our government is saying to us right now, that we're going to spend our way out of our debt problems. So finally, the defendant says the fact that goods and services cost more every year is insignificant. This is the argument that they make, because salaries also rise every year. Respected economists make stupid statements like this. Well, what about the fact that a lot of salaries don't keep pace with inflation? And even if that were true, which is not, what about people on fixed incomes? What about retired people? They're the ones that get hurt the most with inflation. And if and when we have hyperinflation, which I hope doesn't happen, but it appears more and more likely every day, week that goes by is going to happen, what about them? They're the ones that are going to be devastated. And the last point, they say that Federal Reserve notes, even though they're backed by nothing, and this is not my statement. I realize I'm a right-wing wacko. I don't dispute that. But this is not my statement. Go to the U.S. Treasury website. Go to the Q&A section. They state that. They admit that. The Federal Reserve notes are backed by nothing. Unlike the U.S. gold certificates, this is a direct quote from their website, Federal Reserve notes are backed by nothing. But they still claim that they're just as valuable as the U.S. gold and silver certificates were. So I mentioned that the U.S. dollar and gold have a direct inverse relationship. Here it is graphically represented. The gold line, of course, is gold, and the green line is the dollar. As you can see, when the dollar is going up, gold is going down. Occasionally the dollar will go up when the government is doing something right. But most of the time the dollar is going down, and most of the time the gold line is going up historically. And this is not just true of the dollar. This is true of the euro, the pound, about any currency you can mention. Now, this chart needs to be updated. It was last updated September 2009, but it's just more of the same. It will be updated to now. You can see that over the last 10 years, the Dow, the NASDAQ, that's the green and the pink off to the left, are all down over 10 years. The only thing that's shown to be positive, besides precious metals, is the 30 U.S. bond, and that's only up 29%, so that's less than 3% a year. The U.S. dollar index is down. The little slice is up 3%. The world stocks, that's ex-USA. That means without U.S. stocks. If U.S. stocks are included, that would be negative too. But for the last 10 years, world stocks have been up just slightly, like 0.3% per year. But then look at silver, platinum, and gold. Zoom, zoom, zoom. And of course, over the last 6 or 8 months, gold is up even more. So we're up about 400-some percent, 450, I believe it is, over the last 10 years. So where has your money been for the last 10 years? If it's been in dollars, you've been losing purchasing power. You've been losing money. Now, most of you know that I've spent most of my life in financial services. I've been a pastor for the last 35 years, but I've also made my living in finance. And I'm well versed in the fact that you're not allowed to guarantee any investment. Our compliance officers were very clear about that. As a matter of fact, for a while, I actually was personally the compliance officer. As a branch manager, I was responsible for compliance, but for a time there, when our compliance officer was ill and then passed away, I actually took over as the firm's compliance officer. So I know that you can't guarantee any investment, but our government has actually guaranteed us that gold is going to double. And the reason I say that is the government a year ago told us, as I mentioned last week if you're on the call, that the national debt was going to double in the next 10 years. Now, that was an understatement. More conservative economists said that that the debt was going to double in 5 years and triple in 10 years. And I believe the conservative economists have been proven to be right, because the national debt was 11 trillion a year ago, and they said it would double to 22 trillion within 10 years. Well, it's already risen to 13 trillion just in the last year. So I think that it's very likely we'll see that doubling in 5 years. And if you look at this chart, you can see that every time that the national debt has doubled, that gold has doubled. So I believe it's a safe bet that that we're going to see gold doubling. So we'll come back to that in a little bit, but I want to go over a concept with you about value versus price. Value is a very different concept than price. People tend to think of both of them being the same thing when it comes to gold, but they're not. When I was much younger, I had bought a lot of gold at around $200 an ounce. And some years later, in the early part of 1980, I sold it around $800 an ounce. And I thought I had done a very, very smart thing. And I had, in a way, you know, I had protected my money. I had kept it from losing value. But while it looked like I had quadrupled my investment, in reality I hadn't made an investment at all, because by buying the gold bullion as I'd done, I had hedged my personal wealth. But hedging is different from investing. Investing is when you put your money in something and it goes up in value, not just in price. Now let me show you what I'm talking about. In Jesus' time, a couple thousand years ago, a stonemason would have been paid in silver, drachmas of silver. The equivalent of in gold of what they would have been paid would have been about 1 ounce of gold. Okay. Now, interestingly, in 1776, when our country was founded, a stonemason got paid about $20 a week. But that was about 1 ounce of gold as well, because gold was selling for, I believe it was $19.86 or something like that in 1776. Today, a skilled stonemason uses a little bit different tools, as you can see there, but he gets paid about $1,200 a week, which is about the price of 1 ounce of gold. Interesting, isn't it? Okay. Now, my wife's favorite car is a Mustang, so I was surprised and interested to find, because it's hard to find these things, but I found an ad for a brand new 1965 Mustang, which sold for about 50 ounces of gold. I believe, you know, I've got tables that show me exactly what the price of gold was every year back for centuries. And the 1965 Mustang sold for like 48, 49 ounces of gold, you know, roughly 50 ounces. None of these things are exact. And a brand new Mustang today sells for about 50 ounces of gold. Okay, so goods and services, right? I found an article on the internet, but it referred to an article from the May 4th edition of 1998 edition of Forbes magazine, which started out by, the article was titled Gold Miners versus Haberdashers. Haberdasher, of course, is a clothing merchant, a purveyor of men's clothing. With an ounce of gold, a man could buy a suit of clothes in the time of Shakespeare, in Beethoven and Jefferson, and in the Depression of the 1930s, according to an article in the May 4, 1998 issue of Forbes. And then later on the article said, which is particularly interesting because the real gold price has been astoundingly stable since Shakespeare, born in 1564. A little further research showed that a Roman toga, fine Roman toga, cost about 1 ounce of gold. And today, this article was written about 12 years ago, a Brooks Brothers suit cost around, a good quality Brooks Brothers suit cost around $1,200, $1,250. So isn't that interesting? And finally, as far as value and price, some of you have seen this before. I've shown this on prior webinars. In 1910, a brand new 3-bedroom, 2-bath house cost $5,000. But in the price of gold at that time, that was about 200 ounces of gold. Today, a brand new 3-bedroom, 2-bath house costs about 2 ounces of gold. So the principle here is that the price of gold changes, but the value of gold doesn't. Gold will always buy roughly the same in goods and services, in labor, even in food. I'm doing a study on that now and finding the prices of food throughout the ages, like a price of a loaf of bread. And it's amazing how gold has stayed steady in what it will buy you. Now, what difference does all that make? Why do I go to all this trouble? Well, here's the principle. Bullion gold protects wealth. That's the purpose of it. All right? It's, in my mind, the purpose of bullion is to protect wealth, to keep it from deteriorating or eroding with inflation. Investment-grade gold creates wealth. Now, are there times when you can invest in bullion-grade gold and you'll actually make some real returns? Yes, of course. And there are even times when you can invest in bullion gold and lose a little bit, because none of these things are exact. None of these things are in lockstep. So, you know, there'll be times when maybe the house might be 180 ounces of gold, or it might be 220 ounces of gold. You know what I'm saying. But in rough terms, gold will always buy you the same amount of goods and services. So if you're investing in investment-grade gold, which we'll talk about exactly what that means in a little while, you're going to be creating wealth, not just protecting your wealth or holding as a place marker like bullion does. Now, going back to what we talked about a little earlier about gold going up in price, raise your hand if you think gold could double in price. Anybody think that gold might be going up and double in price? Okay, I see those hands. Sure. Last Friday, as I was speaking in Dallas, gold hit a new all-time high of $1,260. Okay, that was a record high. Never been anywhere near that. Well, actually, it had been near that. It hit $1,253 a couple of weeks before, but I mean, it had never closed above $1,250. So this was a first. This, though, was a little surprising to me. I found this while I was actually out in Dallas, and I changed my slides a little before I spoke, because I'd heard many, many people talking about $2,000 gold, and a lot of people talking about $5,000 gold. But this article had 10 very respected analysts, and not wild gold bugs, talking about $10,000 gold. And so this was just last week, June 16th. And amongst them, you can look this article up. That was the title, Why Many Respected Analysts See Gold Going Up to $10,000. I'll just quote one of them, Peter Schiff. Now, Peter Schiff is the CNBC analyst. Again, he's not a gold bug. A gold bug is somebody who just always talks about gold all the time. He was the guy who called the 2008 bear market on CNBC publicly. He was warning everybody, get out of the stock market. It's going to crash. And he was recently quoted in Business Week as saying, people are afraid of the debasement of all currencies, not just the dollar, all currencies.
Mm-hmm. Welcome to GoToWebinar. Web events made easy.
Sorry about that, folks.
Because all currencies these days are paper-based. Okay? So he said people are afraid of the debasement of all currencies. What's surprising is that gold is still as low as it is. Now, this is just a couple of days ago. Gold is high in some people's estimation, but he says what's surprising is that gold is as low as it is. Gold could reach $5,000 to $10,000 in the next 5 to 10 years. Others of these analysts, the reason I quoted him is because he's the most conservative of the 10. Others of these people are talking about gold going to $10,000 in the next 2 years. So, read the whole thing. It was very interesting, and each of them gives the reasoning for the reason why they think gold could go to $10,000. Bob makes a comment here and says, these webinars are superb. Is it possible to get a copy of this webinar and last week's to study? Yes, just send an email to webinars@bellsouth.net, and we will send you a link to the recording of last week's. And it usually takes us a couple of days to get each webinar posted. Okay, let's talk about the difference between preserving and creating wealth. On the left, we have 3 different types of ways that you can hold your money. The first is faith money. That's what I call the green things you carry around in your pocket.
Is that a new term you've coined, Tom?
Well, yeah, it's sort of like musical chairs, Greg, where they pull one chair out and you go around the circle and the music stops and you sit down, and the last one left, you don't get a chair to sit in. The last one holding that $20 bill or $100 bill when the music stops, when the dollar crashes, is going to be stuck with it. And they're not going to get anything for their money. So that's why I call it faith money. I think everybody realizes that sooner or later those dollars are not going to be worth anything. I heard a gentleman interviewed who was actually there in Germany when hyperinflation hit. And this is pretty much of an exact quote, I believe. He's an older gentleman, of course. He said, like lightning gets struck. We had no warning. No one would accept our paper money. And that's what it's going to be like. If we have hyperinflation, there's not going to be an article about it in the Wall Street Journal saying, all right, on August 1st, 2010, hyperinflation is going to hit, so make sure that you sell your dollars and buy gold. It's just going to happen. There will be no warning. So anyway, if you have your $100,000 in faith money, that's your second column there, $100,000 there, or you put your money in gold bullion, that's the second row down, or you put your same $100,000 in investment-grade gold, which is carefully selected, not just any random rare gold coins. My daughter's getting 2, but she's 13 years old. It's her new favorite word, random, which is at least better than the other word. We took Lance Walno's daughter and a friend of hers to Six Flags on Saturday, along with my daughter Sarah, and I don't think I ever heard the word totally so much in my entire life. Totally this, totally that, totally. 3 teenage girls, 13 years old.
Everything's perfect. Oh, perfect.
Oh. But anyway, Sarah's favorite word is random. So you don't want to just get random gold coins. They need to be carefully selected by an expert. And our gold buyer, Greg Halloway, does that. Anyway, if you put $100,000 into faith money and gold doubles, then your money in the bank, in a CD or whatever, will still be on its face, worth $100,000. That's in the green column there, right? If you put it into gold bullion, on the face of it, it'll be worth $200,000, right? Gold is doubled now. And if you put it into investment grade gold, it'll be worth $300,000 to $500,000. Now, why the range? Well, obviously, investment grade gold is going to go up more than gold bullion. Bullion is just going to track inflation. Investment grade gold, for reasons that I can't get into right now, but we talk about this in other webinars, particularly the Tuesday night webinars, will go up a lot more than bullion. But depending on how long it takes gold to double, that's going to determine whether it goes up to 300,000 or 400,000 or 500,000. So that's why the range. If gold doubles very quickly, say in a year to year and a half or something like that, it may go up 300,000. If it takes several years to go up, then it could the same amount of money put into rare gold coins could go up to as much as 500,000. Now, when gold doubles, your green paperback money, if gold is doubled, is going to be worth half as much. Or as you saw the chart about gold going up in price, as that happens, the dollar depreciates in value. So your $100,000 today in faith money, regardless of how long it takes for gold to double, will be worth, your third column there, $50,000 in today's goods and services. So the faith money, reading across from left to right, will still look like $100,000. That's what your bank statement will show. It'll still show $100,000, but it's going to buy you $50,000 worth of today's stuff. Does everyone get that? Nod your head if you understand. Okay. All right. Now, go to the second line, your gold bullion. You put $100,000, that's at the top, very top of the column up there in white. It's now worth $200,000 on the face of it because gold has doubled. So your $100,000 grew to $200,000. But remember what I said. The gold bullion goes up in price but not in value, because when you sell that $200,000 in gold, you're going to get $200,000 in greenbacks, but they're going to be worth $100,000. Why? Because your dollar has been cut in half as far as purchasing power. So it's worth $100,000. Now, are you happier than if you kept it in faith money? Of course you are. Your $100,000 in white at the top is worth, second row on the right down there, second column, worth $100,000. So you preserved your value of your investment. You didn't lose money, so you're happy. But would you be happier down in the third row if you bought investment grade gold? Yes. It has been cut in half too. The 300 to 500,000, once you sell that, is worth 150 to 250,000. Okay. It's going to suffer the effects of inflation as well once you turn it into cash. But would you rather have $150 to $250,000 than $100,000 or than $50,000? Of course you would. Okay. And by the way, a side note on that, people are always asking Greg on the Tuesday night webinars. We do. He does webinars every Tuesday night, and I host those, just like Greg hosts our Monday night webinars. Every Tuesday night at 6 o'clock Eastern. People always ask Greg the question, when should I sell my rare gold coins? And he says, when you need the money. And he said, well, no, I mean, when will they be worth the maximum value? And he said, the longer you hold them, the more they're worth. So when you need the money, that's when you sell them. And this illustrates that. Over the short haul, they might be worth 300,000. Longer time, 400,000. Hold them for 4 or 5 years, maybe they're worth 500,000. If you hold them for 10 years, they're going to be worth that much more. Over the last 100 years, rare gold coins in England, for instance. Although there have been years when spot price of gold, maybe about 10 years out of the last 100, has dropped because occasionally you'd have a conservative government in England. They'd do something smart for a change and pay down the debt or do things that would, say, cut taxes or whatever. And so the pound would strengthen and gold would drop. So there might be, say, 10 years or 11 years out of the last 100 when the price of gold, the spot price of gold, would go down. But there's never been a year out of the last 100 when the price of the investment-grade gold, the high-quality rare gold coins, dropped in price. Okay. Now, here's an interesting comparison, and the reason we use the 40-year time frame, this is from January 1st of 1970 to January 1st of this year. The reason we use that 40-year period is because that's the time frame that Greg has been investing in rare gold coins. And we looked at the comparative growth of $10,000, first of all, that was invested in the stock market, and over that 40-year period of time, it grew to $105,000 if you invested in the Dow Jones Industrial Average. That's the DJI there. Now, if you'd invested that same $10,000 in gold bullion, you had over 3 times as big a return, $320,000. And that's in gold bullion based on the New York spot price. That's a lot better, but you really didn't make any money. Remember that. Because that's basically what inflation did to you. But it's a whole lot better than the stock market. The stock market did not make money for you over the last 40 years. Now, if you'd invested that same money in rare gold coins, and this is based on the PCGS 3000 index. This is an index of rare gold coins that basically has had the same coins in it for the last 40 years. And by the way, that's a whole lot different than the Dow Jones Industrial Average, the S&P 500, and so on. Those averages every year or two are changing stocks, and they do it to beef up the average and to make it look better. For instance, last year, the General Motors, which is now Government Motors, of course, was taken out of both of those indexes because it completely fell apart. It went down to 17 cents a share. And naturally, they put in a strong stock to take its place. Well, that had the effect of making both of those indexes appear to be stronger than they actually are. If the Dow had the same stocks in it that it started with, it would not have, let's put it like this, if it had the same stocks that it had even just 40 years ago, it wouldn't be up to $105,000. It would be much worse, right? But even with changing stocks out and fiddling with the index, gold bullion still did 3 times as good as the Dow, and rare gold coins, just ordinary rare gold coins that are in the PCGS 3000, which did not change. Every one of those coins that were in there 40 years ago are still in there, did over twice as good as gold bullion. And although we can't quantify it here, the kind of coins that Greg purchases for his clients now, today, would have done 3 or 4 times better than the PCGS 3000. The reason I say that is because these coins are coins that are, if I can use a terminology like this, ordinary rare coins, coins that would be coins that trade at least once or twice a year so that you can create an index from them. The kind of coins that he buys are coins that sometimes might not trade but once every 5 or 10 years. I've seen some coins that he's bought just recently that when he bought them, it was the first time that a couple of them had been bought in the last 5 or 6 years. So these are extremely rare coins, and these types of coins would have brought 3 to 4 times as much as the PCGS 3000. Now, keeping these 3 numbers in mind there, this is a graphic representation, this next slide, of those. Off to the left here, you see the original $10,000 investment. The second column is the $105,000 it grew to in the Dow Jones. The third column is the $320,000 the $10,000 grew to in gold bullion. And then the big column is the almost $700,000 it grew to if you put it into rare gold coins.
Ordinary rare gold coins.
Ordinary rare gold coins. And then you can't even see off the screen what it would look like if they'd been put into the extremely rare coins that he recommends. Okay? Now, this is just a comparison, and it doesn't really show the drama because this is a logarithmic chart. But the red line is the S&P 500 for the last 10 years, and the green line is gold. But basically, you see gold just from left to right just going straight up, and the S&P 500 meandering around and overall down. If you drew a straight line from here to there, it's down 22.3% over the last 10 years. But as I say, it's a compressed chart. If it was not logarithmic, the old line really goes more like this, you know, at a much steeper angle. So it looks more dramatic, but you can't show it on the screen. Okay, there is a huge demand for gold right now. Twice last year, the U.S. Mint ran out of gold. They had to stop minting their 1-ounce coins. This is the World Gold Council, a quote from them. World gold demand up 51% from last year. Johannesburg, where they make the Krugerrand bullion coins, demand for gold coins has hit an all-time high. This is an actual machine that's used in Europe in the airports. This is a German one where they sell gold bullion in vending machines. And this blows me away. They actually sell gold. They update the spot price of gold every 10 minutes electronically, and they sell gold at 30% over the spot price. Yeah. Now, personally, I wouldn't pay 30% over spot. I would shop around, and you know, the most I would pay is maybe 10% over spot. But I mean, people are just so into gold in Europe because depending on which country you're in the last century, some countries over there, they're seeing their currency go to nothing anywhere from 2 to 4 times in the last 100 years. So they really value gold over there. They're a lot smarter than most Americans in that regard.
30% over spot. So someone comes there, puts their credit card in, and is willing to pay 30% over. That is amazing.
Yep. Just for the immediacy, for the convenience.
Yeah. Yeah.
This is an article that I just received today. Saudi Arabia, which is the world's 4th largest holder of foreign exchange reserves, in other words, cash of other countries, has been hiding this, but they've just revealed that they're sitting on twice as much gold as they had previously revealed. And this is adding to new estimates anyway, they basically have been kind of concealing the fact that they were holding so much gold, all right? Now, the article says that this World Gold Council revelation about Riyadh's gold holdings comes just a year after China surprised the bullion market when it revealed its gold holdings were more than 1,000 tons, almost double what it had reported for years. They've been keeping it secret. And when they revealed it last year, I remember seeing that article, they admitted that their gold holdings were twice as big as they had said, and they said that they were going to increase their holdings by 500%. Now, what do you think that they're using to buy that gold with?
U.S. dollars.
Yeah, they're one of the largest holders of U.S. dollars. Matter of fact, they're the largest holder of U.S. dollars other than the U.S. itself. They own 24% of the U.S. debt, and they hold that in U.S. dollars. So they're selling dollars, which further depresses the dollar. I mean, we're depressing the dollar ourselves by printing trillions of dollars that's not backed by precious metals. But China is contributing to that now by selling dollars, and they're contributing to the rise in gold by buying gold and contributing to the supply and demand situation. The article goes on to state that the revelation could fuel gold's rally, as it is a further sign that central banks are keen on gold. Must be someone from England wrote the article, keen. Analysts believe that central banks could be net buyers of gold this year for the first time in nearly 2 decades. And finally, gold prices hit a nominal record high above 1,260 troy ounce on Friday. Now, it's at a nominal record high. It was a record high, but watch this last sentence. He called it a nominal record high because, adjusted for inflation, bullion is still a long way from its all-time high of more than $2,300 in 1980. Now, did you catch that? I'm just doing a quick calculation here. At 1260, gold is just over halfway to its real all-time high. It's at 54.78% of its all-time high. So when people say, oh, gold is really high, you know, it's over $1,200, gold is just slightly over half of its real all-time high adjusted for inflation. So it's got a long way to go, baby. What does this mean? Well, gold up, dollar down, gold up, euro down, gold up, pound down, gold up. Fiat currencies, paper currencies, go down when gold goes up. When gold goes up, paper currencies go down. It's happened over and over again, and it will continue to happen. So, what can we do? We can protect ourselves. Our government knows of the impending disaster that's going to happen to us as the dollar continues to drop. But there's no political will to prevent it. Just this last week, Jim Bernanke, the chairman of the Federal Reserve System, admitted that our debt situation is unsustainable. That was his word. Now, that was interesting because just a few months ago, I mentioned this last week, that the White House budget director, not exactly a conservative activist, Obama's budget director, admitted that the economy was on an unsustainable fiscal course. So to hear Bernanke and the White House budget director using that word unsustainable sends a signal. When these guys, liberals that they are, make statements like this, when they say that we're in trouble, we're in trouble. But although they're admitting that there's problems, I guess to give themselves political cover when things fall apart, they're not willing to do anything about it. In almost the same breath that Bernanke admitted that our debt is unsustainable, that there's a huge problem, he went on to excuse the government for piling on more and more debt by saying that it was necessary to ease the pain of the recession. Well, what would you rather have, a little pain or have the country go bankrupt? Ben. So people are always saying to me, Tom, we've got to get the country back on the gold standard. Get over it. The country is never going back on the gold standard. The politicians are not willing to ask the country to go through the pain, the sacrifice that's necessary. And if they were willing to, there's not enough gold. We have maybe enough gold to cover 2, 3, possibly 4% of all the dollars that are out there. It's impossible for the country to go back on the gold standard. So that's not going to happen. But we can put our families on the gold standard. We can protect our families. And just as important, we can be Josephs. You know, Chris Poole did a wonderful teaching on the Joseph ministry a few months back, and I would encourage you to listen to that webinar. We can be Josephs. We can be in a position to not just help our families and our churches, but when things happen, when things fall apart, we can be in a position to help others that are less fortunate than ourselves. And that's one reason why the Lord put us here on the earth, isn't it?
That's right.
So here's some common sense from the Word of God for you, and I'll close with this. Proverbs 21:20. Be sensible and store up precious treasures. Don't waste them like a fool. Last word, the best place for your gold. You don't want to hold gold in gold stocks, in gold certificates, in gold ETFs, that's exchange traded funds, or any kind of paper version of gold. Why? The reason why you need to have the gold, physical gold, the yellow stuff, rather than any kind of paper version of gold, is quite simply that if things get bad, you may not be able to get your gold. If you got a piece of paper that says that you own gold and the systems fall apart, you may never see that gold. Now you can use IRAs, any type of IRAs, traditional, SEP, Roth, whatever, or 401k rollovers. But, and again, I don't have time to go into this tonight. We're about out of time here, but I believe, personally, that there's a very good chance that Obama's going to put a grab onto our 401ks and IRAs. So yes, you can use that vehicle to buy gold with, but you're better off getting the money out and then buying gold with it. And if you'd like to discuss that, feel free to call my office. I can explain to you ways that you can do that. Some resource materials, you can get some good articles that have been published on Conservative Truth just by sending an email to rarecoins@att.net. Actually, one of those hasn't been published there because it's a monograph, it's a PDF file. That's the bottom on Golden Art. But the others, the Non-Federal Fed, the History of Money and Debt We Trust, and particularly the 10-10-10 Financial Survival Plan. That's one I wrote. I spent several months researching it. It's a detailed plan for how to use precious metals to protect yourself. So you can get any of those or all of them by writing to rarecoins@att.net. And then, of course, this webinar and the Tuesday night webinars, many of them are posted on christianfinancialconcepts.com, and you can receive back issues or recordings of any of them by writing to webinars@bellsouth.net. So with that, if you have any questions, now's the time to type them in.
And Tom, you'll forgive me, I'm on the line here, so I'm not able to see those questions. And I can see the
Okay.
graphic, see the question.
I will.
Reminder of that.
Alrighty. I will watch the questions myself then.
Yeah. Folks, the way this webinar works, if you ever can't get in by your computer or you're on the road, there's a number that you can always call into and listen in. You can also call in by phone and watch on computer, which is what I'm doing now.
Yes, and that phone number, by the way, is in the email. So if you ever think that you're going to be on the road and not able to be at your computer, just print that out and take it with you.
Well, Tom, I just want to take the time to thank you for another excellent presentation. You just seem to be getting better and better and more articulate, more clear. And I just want to continue to encourage the listeners to pass the word on. As Tom and I discussed before, I think we feel time is getting short, and it's going to be a rapidly accelerating process. As you said, you're not going to be able to get gold. So thank you, Tom, for your work and your research and your time to bless the people.
Well, it's my pleasure.
Do we have any questions?
Well, let's see. There's a question here. Where could you buy either coins or bullion? The best thing I can tell you, Mash, is to write to that email address that's on the screen, the rarecoins@att.net. And I can send you some information on that. let's see. John asked, so what you're implying is that it would be better to invest in rare gold coins rather than accelerate paying off one's mortgage. No, I didn't say that, John. Um, I think that it's always best to get out of debt. I'm a big believer in paying off debt. So I would never tell anybody to invest in anything rather than paying off debt. Any other questions? Let me just, while we're waiting for the questions, let me mention to you that we have a great speaker next week. It's actually someone that we've been in contact with before and arranged for him to speak next Monday night. His name's John Muratori. But I had the opportunity to hear him speak at the conference, and I was really impressed. He has a real good handle on finance and investing, and everyone was very impressed with him. Chris, do you have any anything you'd like to share about John's presentation?
Tom, in listening to John's portion at the conference, he is extremely articulate. He's extremely in the know in terms of what's going on financially. You know, actually listening to him is a lot like listening to your webinars. He covered a lot of the same information, just a slightly different style. But I just want to highly encourage everyone to be sure and dial in next Monday, because I think they will thoroughly enjoy his session, and I think they will get a lot of really good information out of it. So I'm definitely looking forward to it myself.
Yeah, he wrote a great book. I'm trying to. It was originally titled "Rich Church, Poor Church," but it's been retitled. I can't remember the name of it, but anyway, because it's not so much about churches as it is about individual. Oh, Money by Design. Thank you, George. I appreciate that. It's called Money by Design, because the title, I think, implied that it was about church finance, but it's really, I'm sorry. It's really about personal finance, and it's a tremendous book. It's basically a financial plan for individuals. So it's called Money by Design. If you get a chance to look that up, and the speaker is John Muratori, M-U-R-A-T-O-R-I. So he's a friend of George Bokaloff. George introduced us, and as I say, I got a chance to hear him and meet him. And he will be our speaker next Monday night at 8 o'clock. So, any other questions or comments before we close her off for tonight? Okay, well then, I want to thank everyone for being here tonight. It's always my pleasure and honor to be your host or speaker, whichever I am. Sometimes I'm the host when Greg's not here, and we have other speakers. Sometimes I'm the speaker, and I'll get a chance to just sit back and enjoy and listen next week. So I'm looking forward to that. So, any last words, Greg or Chris?
Tom,
Chris,
good as usual tonight. Thanks for your efforts, and look forward to next week.
Thanks for being on the call, Chris. Thank you again, Tom. Good night, everybody, and God bless you.